All right, my beautiful friends. It's Monday already. One more day off. Just one. I would have missed you, though. But here we are. Back to work. Let's talk. As I am doing this video blog, stocks are higher. But again, that's not where you should be looking. We'll talk about that in a second. No surprise to any of you that follow this blog why stocks are higher right now. I explained to you that this is more than likely how this would play out. I think this week, again, unless something big comes along, and we're going to talk about that too, is going to be a bullish one for the market. So, again, stocks are higher right now because President Trump has decided to not hit Mexico with tariffs. And why? Apparently, Mexico has agreed to comply with trying to stop the flow of illegal immigrants into the United States. This is a good thing. Okay. Number two, and we're hearing a lot more about this right out of the president's mouth this morning on CNBC, talking about the Fed, talking about rate cuts. Look, I cannot imagine right now how we're not going to get more easy money flowing into not just, or flowing out of, not just the Federal Reserve, into the markets around the world, but all world central banks are going to do the same thing. So it's literally an inflate or die environment. And I mean this, I'm not just making it up. If world central banks do not cut rates and start pumping cash of easy money, free money into their economies, the markets around the world will die. It doesn't matter how this will affect the average guy or the average girl on the ground. It doesn't matter that more easy money will dilute the value of the dollar and every other fiat currency. Doesn't matter how hard your life is if you're a member of the middle class. As long as stocks go up, that's all that matters. This here, again, we've lost our country. Our forefathers would be rolling over, or probably are rolling over or rotating in their graves right now. There's no resemblance whatsoever as to what was envisioned by these great men and what we have now in the United States. This is in no way a government of the people, by the people, and for the people. As a matter of fact, it's completely flipped upside down. This is the United States of corporate America, the United States of socialism, the United States of bailouts, and that's what we have here today. Period. This is a global phenomenon as well, so that should say something to you. So, again, like I said earlier in the video, yes, stocks are higher, but let's look at the bond market now. The 10-year yield has come up. Now, why is that? Well, it's twofold, and I think you probably know, but let me outline this for you. Number one, being that this issue with Mexico is off the table for now, the president did say if Mexico does not comply, that he will hit them with tariffs, but for now, we're all friends again. So that's one reason why 10-year yields have come up. There's less fear in the market. Number two, the market is not just anticipating, I can't say that, fully expecting the Federal Reserve to cut rates. And what will that do? Exactly what I have explained to you. It will normalize the slope of the yield curve. This is stock market positive. So that's why we're seeing this kind of action. Now, let's move forward to what could mess this whole thing up. President Trump, this morning on CNBC, when he was going off about the Fed and everything else, said that China, let me get this right. I want to read this to you because I don't want this to be my words. Here we go. President Trump, quote, China is going to make a deal because they have to. This is his words, not Greg Mannarino's words, all right? I wanted to make sure I got it right. I'll tell you where I think the issue lies. He's very threatening towards China, and they're probably laughing. When he says they are going to make a deal because they have to, I think whenever a deal or starts to come together, the president shoots himself in the foot by pulling off the tough guy attitude. And China's not going to deal with it like Mexico will. Okay? So we'll see how China reacts to that. And that's the only thing that I can imagine this week, or moving forward for that matter, that's going to affect the market and stop stocks from moving higher. Because that's all that matters here. Understand, we are in an election cycle, and the illusion must, and I can't stress that enough, let's underline must 1,000 times, must be kept real. I cannot tell you how many people I know personally believe that if the stock market is high, the economy is strong. They equate one to the other, and it's absolutely false. The gap between what the economy is doing and what the stock market is doing just gets wider every day. Just like the trade gaps, just like trade deficits, we're burying ourselves in debt to keep the illusion real. That's all this is. And the fact, and a lot of you continue to write to me and tell me how wrong I am. Until I am wrong on this, please refrain from that. People keep telling me how wrong I am that the Fed is not going to raise rates. You're entitled to your opinion. But again, if you want to go up against my track record with regard to calling the Fed, you're very brave. You are very, very brave. I have the best record of calling the Fed than anybody probably in the world. And I'm not just saying that. I've been wrong one time in all these years since the meltdown. So no one can read the Fed better than me. Nobody. But if you want to challenge me, good for you. And I wish you luck too. But we are going to get a rate cut. Without it, that's it. The illusion becomes real. It'll be like black turning to white, white turning to black, up turning to down. This entire thing will turn so ugly, so fast, you have no idea. Now, there's no way to stop it. We can push it off, kick the can down the road a little bit, but that's it. And all they're going to do, the president and the Federal Reserve, again, good cop, bad cop, all they're going to do is magnify the issues even worse. But when this does correct the fair value, it's going to be monumentally and exponentially worse. I think you are aware of that. And this is why, again, people, and you know, it's so funny. I guess I'm getting a lot of new people here lately, and my subs have kind of exploded as of late. Welcome to all of you that are here. But understand what you need to do. It's so simple. If we know for a fact, and this is a fact, okay, I can't imagine anyone can argue against what I'm about to say. Central banks around the world have to inflate or die. They're not going to die. They're going to inflate. So what does that mean? Bet against the debt. Become your own central bank. Hold hard assets. My favorite of all time remains physical silver in your hand. Okay? I love gold. I love platinum. I love palladium. I do. I love them all. But silver, in my view, is the most undervalued asset on the planet, bar none, period. So if you want to hold one thing, that's it. Go get yourself some physical silver. This is my opinion. You want to. But I think most of you get it. That's what you need to do. With that said, people, I mean it. I missed all of you yesterday. I keep hearing from more and more of you. And again, like I said, I must be doing something right because my subs have exploded over the past 2 weeks. And I greatly appreciate that. And I will make it my personal business to continue, to tell it like it is, because that's what I do. And I don't sugarcoat anything. I kind of just give it to you straight. And I think that's why. I think always the best policy is to just tell things like they are. Don't skirt around the issues. Just what is it? And what do we need to do about it? Well, it's pretty simple, like I said. With that said, this guy loves you, and I mean it. I will see you at the end of the day.